Hello traders, hello everyone, and welcome to our new free video update in which I will go through some of the FX pairs and also will take a quick look at Nasdaq 100, DAX, gold and even cryptocurrencies. So what is going on? Well, we are still seeing euro dollar trapped in some kind of a very tight range, actually, if we consider that we had recently very nice volatility for the last 12 months, if not more. So this is totally normal, and I believe that again we will see some breakouts when some of the central banks will finally decide for tapering. For now, it looks like that we will still have to wait a little bit longer for higher yields from the ECB and still no tapering from the Fed despite very good US CPI figures. So for now, this market remains trapped in the range, but eventually I think that dollar, even if we'll make some kind of a deeper pullbacks, we will see more dollar weakness. Now, firstly, looking at the euro dollar here, I've been tracking two wave counts for a while. Firstly, was looking for temporary recovery for wave B, and then we could continue lower if we would hold these 2018 highs. But I really love how the market is actually moving based on this second interpretation, where we could see higher prices above 2018 levels for wave 5. Because notice that this recent reversal was actually perfect from for a fourth wave, which came down to 38.2% and to former wave 4. What I really love about the current development is that we also have seen a rise above this trend line resistance out of a corrective channel, meaning that we could see more upside after retracements. So looking at the updated structure now on the intraday charts here, maybe this consolidation from the past few days was a triangle in a wave B, so very nice support could be actually around 1.2 level, and I've been talking about 1.2 level a few times in the past. I mean, firstly, here was a support back in February, then we finally have seen a break to the downside, so it firstly acted as a resistance, then sentiment has changed to a bullish phase, and looks like that this 1.2 level was important twice here back in April and then May. So again, if we can see more weakness, I believe, in the next few trading days, again, this could be very nice and attractive level. So for now, I think that there is a little bit of room for more weakness here, at least in the short term. Let's see how the market will close today. It's Friday, so if we'll stay bearish below 1.21 or around that level, I think that this 1.2 could really come in play for the next week. Now, also looking at technical chart here, this is very nice as well. Where I have it here. Well, notice that we have a plenty of moving averages down here around this 1.2 level that I highlighted. It's the 50 period moving average, then you have 100 and 200 daily moving average. So I think that this is very important zone from that perspective as well, not only from an Elliott wave perspective. Now let's take a look also on the euro yen. Now euro yen could see even more weakness if we consider that potential we could see maybe some kind of a risk off, if we consider that actually G7 meeting could bring this 15% tax, which means for big companies, which means that actually Nasdaq 100 or some important stocks like Facebook or Amazon could actually see more weakness. And in such case, I think that Japanese yen could strengthen and euro yen could be the one to see a deeper pullback. Now, from an Elliott wave perspective, what I'm seeing here is a very nice potential ongoing 5-wave rise. And what I love so far about the pullbacks is that each retracement here were quite similar. Here we had this 250 point pullback, then we had again 270 point pullback, and even this one was 230 point pullback. So if we consider or respect this type of activity or personality of the market, because each market can have its own personality, then I believe that it would be worth to keep an eye on potential pullback of 230, maybe 200 or 280 pips of a retracement before we may say that this pullback is completed. And this goes very nicely with a potential wave 4 retracement that could actually take us back to this lower trend line support. Okay, so I think that maybe we are here headed for a deeper correction, especially, as I said, if stocks will see some limited upside. And since I mentioned stocks, let's take a look on Nasdaq 100. So if this technology sector will really be impacted by G7 meetings, then I think that Nasdaq 100 could see more weakness, but nothing to be afraid of. I mean, just maybe a temporary pullbacks. Now here, I'm referring to this potential ABC setback because we can count 5 waves up here, okay? And we know that always after every 5 waves up, normally trend will slow down. Of course, it's very not easy always to say where wave 5 will finish, but it's just good to be aware that potentially we are in the final stages of these cycles and that market could actually slow down. Or in other words, it just may be late to look for any new opportunities, especially from a short-term perspective. You better wait on an ABC setback. So very nice support could be around 13,500, around there at the former wave 4. Also, since I mentioned there earlier Facebook, here we have also very nice structure. Actually, the market came to the upside very nicely since start of the year, and notice that we can count 5 waves up once again. Okay, so again, I think that this is a very important structure which could suggest that this trend could maybe slow down, maybe just a sideways consolidation, or maybe just a deeper ABC pullback. But the idea here is that, again, we could be very late here in this stage of a current 5-wave cycle. Even if you just ignore the higher degree 5-wave structure, you could still be aware of an intraday ABC setback, at least towards 300, okay, because you can count 5 waves up here. So again, it's a very potentially very late to look for any new opportunities here, in my opinion. Also, let's take a look on DAX, which probably has one of the most concerning wave structures regarding the bullish case, at least on for the short term. Firstly, let's look at this daily chart. Well, we can see a very nice uptrend. We have higher highs, we have higher swing lows. The price is supported by this trend line support. So in my opinion, yes, this is a very healthy uptrend, but healthy uptrend could extend even higher after price will settle down. Now, usually this means after a correction, and this correction could actually be around the corner. I mean, we are approaching summer, and this could actually mean that maybe trading will be slowing down, volatility will slow down, and this could result maybe into some deeper pullbacks. Now, from an Elliott wave perspective, what we see here is again potential final stages of a wave 3. Now, wave 3 is also impulsive wave, meaning it should be made by 5 subwaves. Here we have waves 1, 2, 3, 4, 5. Let me label this for you, so for easier understanding. So waves 2, 3, 4, 5. Let me fix this. Okay. So again, after every 5 waves, we should be aware of potential new slowdown, and ideally this will be just another 4th wave pullback that can retrace back to the area of a former wave 4. This comes in around just below 15,000, maybe around this trend line support. Also, notice that we have quite strong divergence on the RSI. Not only that, well, we also have potential wedge formation on a smaller time frame. Okay, now here's DAX for our chart, and you can see potential wedge formation that can be forming here. Normally that's again indication that bulls are still in play, but they are losing strength, right? So again, very important pattern basic technical pattern, not only from Elliott wave perspective, which again could suggest that maybe there is going to be some limited upside. 16,000 of course is still very possible to be seen in the next few weeks or so, but 16,000 also very important psychological level, which again could potentially limit the upside. What is very interesting here, I have an overlay chart with the euro dollar, as you can see. So maybe some would think that this drop on DAX would be very concerning for euro, which I believe so it can be the case, but when looking at this overlay chart, notice that there is no real correlation. Normally that is the case when markets are moving sideways. Okay, so this correlation actually suggests that we are just chopping around and that we do not have any real trends at all. Okay, so let's take a look also on gold. Now maybe if we'll see some kind of a resistance in the near future on stocks, maybe traders will focus more on metals. I still think that there's a very nice potential breakout here that occurred at this a month back or so, and that we are now just consolidating here within this rise that could unfold as an impulse if we consider that drop from last August was overlapping and in 7 swings. So I'm expecting more upside. Now looking at this 4-hour chart here, it looks like a very nice potential correction that is unfolding. Maybe a triangle could be here in a wave 4. As you know, this is a continuation pattern, so if I update this for you, okay, this could be something like that. And of course, when this upper side of the range is broken, you can expect that market will actually move to a new high, possibly here towards 1950 area. If suddenly we broke this former swing low here from June 10 below 1870, then I think that maybe even 1850 could be retested. But again, these are just intraday cycles that can be sometimes very tricky to identify the right bottom of wave 4. So it's very important to keep an eye on different potential interpretations and just be aware that market could make more complex rather than just simple correction. But again, it's just a pause, in my opinion, within uptrend. Also, in G7 meeting, they will be on their agenda. They will be talking about cryptocurrencies. So I think that this could potentially be concerning for the next week. I mean, looking at this crypto total market cap, okay, this is actually excluding Bitcoin. You can see here that we have a very nice structure of an ongoing impulse. So it's an ongoing 5-wave drop here, and so far we are just consolidating. So maybe this wave 4 was or is like a triangle here, okay, an A, B, C, D, E pattern. And when you see wave B, I will say a breakout point, wave drop below wave B, that's when we should be aware of potential more weakness. The another interpretation could be that this is actually, let me just adjust the whole wave count for you, okay, that this could actually be end of a 5-wave drop here, and you are now here in a wave B triangle rather than a 4th wave triangle. Let me also make these the same colors here. So this one is also very concerning. Okay, why? Because triangles never occur in a wave 2, right? So if they occur in a wave B, you know that the next upcoming wave is going to be wave C, the final in a sequence. So it means that there will be limited upside. Of course, there is room for a retracement back to the former wave 4 before this market could potentially slow down. But in both cases, both counts actually suggest that there can be more weakness coming after this consolidation is finished. Either it's wave 4, as I showed earlier, or either after an ABC rise. Okay, so I think that you will have to be very selective whenever you are trading cryptocurrencies. It may not be easy to catch the right coin. I mean, it's much easier to trade cryptocurrencies when you have a bull cycle. For now, it looks like that we are just now slowing down, but I'm afraid that this whole pullback that we are seeing away from these my highs is incomplete and still ongoing. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video. Please subscribe to our YouTube channel, please press a like or share it, and let me know if you have any question. Have a good day. Bye.